Hi everyone! Welcome back to our series. In this episode, I will be showing you how to apply the PER, PBR, and PDR concepts we discussed in the previous episode. I'll also demonstrate how to use our 4 Apsis tools to help you make smarter investment decisions. First, I'll discuss how we use our PER, PBR, and PDR numbers. Every day, we release tables on our social media showing the PSE index and sectoral leaders for the day. In these reports, we rank the 120 companies we cover based on the highest risk-reward potential, specifically looking at their PER, PBR, and PDR. We highlight the top 5 companies in the index and the top 3 in each of the 6 sectors of the PSE. This ranking helps us spot opportunities where the possible gains are worth the risks, helping us and our clients make better investment decisions. Another ranking we post applies weights to the 3 factors, PER, PBR, and PDR, based on the factors we believe have the greatest influence on a company's valuation. This weighted approach provides a more balanced view of a stock's overall potential by prioritizing the most impactful factors for market conditions. At the end of the week, we publish a weekly review that summarizes how the market performed over the past week. This includes index and sector performance, as well as the best and worst performing stocks for the week within both the index and the all shares category. In addition to these ranking and reviews, we also feature 1 or 2 companies daily. In these posts, we share news that could impact their stock prices, either positively or negatively. This helps keep the public more informed and encourages the discipline of checking the news and discerning how it could affect the stocks they hold or may want to buy. We created these tools to help us and our users make better and more informed investment decisions. While there is no guaranteed way to predict the market with 100% accuracy, Luna Apsis helps you narrow down your focus and find stocks with the best potential. Our 4 tools measure the potential upside and downside of stocks, which allows us to maximize our gains and minimize our losses. These tools use metrics like a company's earnings, book value, and dividend yield against their stock price to help us figure out their market-accepted value. Our tools kind of have a flow to them. We have 2 tools that help give you an idea of the stocks you can invest in. First is the Custom Stock Curator. It helps narrow down the companies and you can find stocks suited to your preferences. You can then move on to the Valuation in a Picture tool, where you can look at the graphical representation of earnings, book value, and dividend yield of your choices. After using these tools, you can use our Risk-Reward Radar tool to evaluate your chosen stocks against the industry and our History of Prices tool to see the stock's historical performance. Now that I gave you an overview of our 4 tools, we'll go more in depth on each tool and show you how to use them. So this is the home page of Apsis. To be able to access this, you're going to have to log in with your Luna account credentials over here, and then you're going to click Apsis. So first, I'm going to talk about the Custom Stock Curator, and then I'm going to talk about the Valuation in a Picture tool. Third is our Risk-Reward Radar tool, and fourth will be our History of Prices tool. First is the Custom Stock Curator or CSC tool. Many of us have a general idea of the stocks we want to buy, but find it difficult to select from the vast field of companies out there. The CSC is perfect for that. Like a checklist, all you have to do is select the indicators and factors you wish, and voila, the list of stocks to choose from will appear for you in a click of a few buttons. You'll get the stocks with the best risk-reward depending on what you've chosen, arranged from the highest returns to the lowest returns. When filtering stocks, the first step is to decide what type of stocks you want to focus on. You can choose to look at index stocks, non-index stocks, or all stocks. Which one do you guys want to look at? Okay, let's choose the index stocks. Once you've decided on the category, the next step is to consider the market cap of the companies. Large cap companies are those with a market cap of over 60 billion pesos. Mid-cap companies fall between 30 and 60 billion pesos, and small-cap companies have a market cap of less than 30 billion. So which one are we choosing from? Large-cap companies it is. After that, you can narrow your focus further by selecting a specific sector. The sectors available include the financial sector, holding firms, industrials, mining and oil, property, and services. Which sector do you want to see? If you want to see banks, then we're going to have to choose the financial sector. Finally, you'll want to sort the stocks based on what matters most to you. You can rank them by the best earnings growth, best book value, or best dividend yield. Are we choosing earnings, book value, or dividend yield? Let's go with earnings. Once we choose all of this, we'll be able to generate the results. So these are the results from the custom stock curator. Second is our valuation in a picture tool, or the VIP. The VIP is no different to the SRP we see for the items around us. By looking at the historical market accepted value of a company, we can come up with a cheap, fair value, and expensive SRP for each stock we look at. These market accepted values are pegged to the fundamental metrics of PER, PBR, and PDR. The VIP is a graphical representation of a stock market accepted price versus our three cornerstone metrics: earnings, book value, and dividends. This is our VIP tool. The VIP tool has three distinct charts: one for PER, one for PBR, and one for PDR. But let's focus on just one to explain how to interpret it. What company should we choose? Let's do ICT. So now we were able to generate results for the past 5 years. As you can see here, in each chart, there are 4 lines. The blue line, this one, represents the stock's closing price. The red line indicates the maximum PER band. The orange line represents the average PER band, and the green line represents the minimum PER band. Relating this to what we discussed earlier, if the blue line, or the stock's price, is near the green line, it means that the stock is cheap relative to its fair value. If the blue line is near the orange line, then it is closer to its relative value. If the blue line is near the red line, the stock is considered expensive. This helps you quickly assess whether a stock is underpriced, fairly priced, or overpriced based on its historical valuation bands. So basically, with ICT, we can see that the company is trading closer to the yellow line, so it is currently fairly priced. At its current level, it has both an upside from here to here and a downside from here to here. And over the past year, ICT has been trading above its average and closer to the red as their earnings have been going up from Jan of 2024 to December of 2024. This could be an indication for us to look into the company, to do more research, and see if from its current place in the chart, the average, it will still go up to reach its high or the red line. This tool shows us the cycles of the company's earnings. Just like how the weather has cycles, here in the Philippines, from June to November is rainy season, and December to May is dry season, we can also see a company's earnings cycle with this tool. What's great about this tool is that it's not just focused on technical analysis, which primarily relies on stock price trends. Our tool places a strong emphasis on the fundamentals of the company, such as earnings. By comparing the stock price against these fundamental valuations, we can estimate the potential upside and downside. If we buy at the bottom, our risk is much lower compared to buying at the top, because the downside is smaller if we're already closer to the bottom line. On the other hand, buying at the top increases our risk due to a bigger potential downside. However, it is important to note that this chart serves as a guide to inform further research. Just because the stock is in the green zone doesn't mean we should buy right away. We still need to check the sector or industry performance, assess whether there have been any breakthroughs, or investigate if the company is facing challenges that might explain its low position. Similarly, for companies like ICT, even if it's already at the red line, the stock price can continue rising because the company has a strong, diversified international portfolio and has been able to significantly grow its earnings over the past year. Overall, this tool helps narrow down the stocks we need to research further by giving us an indication of which stocks should be looked at or given more attention to based on their position in the graph. Values closer to the historical low suggest undervaluation, those near the average indicate fair valuation, and those closer to the historical high signal overvaluation. This uniform approach allows for a straightforward assessment across all the three metrics. Third is our Risk-Reward Radar tool, or RRR. With this, you will be able to put companies side by side and evaluate them using their price-to-earnings ratio, price-to-book ratio, and price-to-dividend ratio. This tool is helpful when you are trying to compare companies in the same sector, like holding companies, banking companies, or mining and oil, because it would be comparing apples to apples. Using this tool to compare companies from different sectors would not be as accurate because different industries would have different PER, PBR, and PDR standards, resulting in skewed results. This is our Risk-Reward Radar tool. But first, we have to choose a sector. Which sector do you guys want to look at? Let's look at holdings because that's what I see the most. First, let's choose AC or Ayala Corporation. Next, SM. And third, let's choose GT Cap. So now, these are the generated results. Each table shows the historical high, average, and historical low, as well as their distance from the stock's price. With our examples, we can see that AC's current PER is 9.5 times. The historical high is 894.02, which is 53.35% higher than their current share price. Historical average is 682.94, which is 17.14% higher, and their historical low is 581.69, which is 0.22% lower than their share price. From this, we can tell that AC is trading between its mid and its low, but trading closer to its low, while SM and GT Cap are trading under the green line or trading at a price lower than their historical low. So we can say that SM and GT Cap are technically cheaper than AC because they are trading under their historical low. Similar to the VIP tool, the RRR tells us whether a stock is trading at a premium or discount while comparing it to other stocks. And based on the numbers you see here, you can see that all three companies are undervalued as of the moment, since they are trading closer to their historical low. This indicates an opportunity to do further research to determine if these companies are worth investing in, as they appear to be cheap relative to their historical valuations. Next is our History of Prices tool, or HOP. This shows a stock's gain or loss performance over a specified period of time. It shows us the seasonality of stocks, with certain stocks performing better during certain quarters. To make it easier to understand, you can think of it like checking the stats of a sports team. You will be able to see who performed well historically or through the seasons by checking their win-loss ratio. So this is the HOP tool. First, we have to select the time frame. Let's select the past 3 years. Next, we'll focus on quarterly performance. And we'll focus on the third quarter. From there, we'll generate the results. With this setup, we can identify the top 10 winners and the top 10 losers for our chosen period. The results are ranked based on the highest average price change per year for the winners, while the losers are ranked by the bottom 10 or the worst performing stocks. For example, we can see that Plus performed the best for the third quarter because they increased by 72.12% on average per year. On the other hand, ABS was the worst performer because their stock went down by 23.55% on average per year. So what does this tell us? The HOP is kind of like the stats of a sports team that tell us about historical performance. It tells us which teams performed best during the regular season versus off-season or in the Wimbledon versus the US Open. After seeing the stats, you can try and look for the reason behind why some stocks perform better during certain seasons to gain more insights on the trends and their seasonality. Those are our 4 tools that we use here in Luna. I guess the next questions to answer are, how can you apply everything that we just taught you, and what are some of the experiences where we found success using our process? We'll go through 2 of our reports from the previous year that we sent our clients and walk you through our process. First, we made a report related to the consumer industry. We started looking into it when we saw statistics about how the 2024 savings level is on track to return to pre-pandemic levels. We believe that with replenished savings, 1. Filipino consumption would normalize and consumer confidence would rebound, and 2. There would be an increase of discretionary spending on non-essentials such as dining out, travel, and entertainment. With this conclusion, we started looking into companies that would be affected by this. And with the help of the Valuation in a Picture tool, we zeroed in on Puregold. Through this, we saw that the stock was trading closer to the green line, which meant that the company was undervalued. So we decided to set up a meeting with them to do more research on their future plans and direction. After meeting with them, we concluded that their direction aligned with our thoughts of this company being a promising investment. Because of all of this, we were able to buy Puregold shares at 25 pesos, and we were able to sell it at a little over 30, or when it started trading closer to the red line. This resulted in an almost 30% gain. Second, we created a report on the telecom industry after seeing that broadband in the US hit speeds of 301 terabytes per second, which is a million times faster what we currently have. From there, we looked at the industry as a whole and noticed a shift away from signal and towards the internet, which resulted in technological obsolescence of prior investments, such as 3G and 4G, because of the rapid evolution of technology. We saw that the next battleground would be in fiber broadband, and whoever could provide speed, reliability, and new technology and upgrades would achieve future success. Through our risk-reward radar tool, we put Converge, PLDT, and Globe side by side to find out which one had the most potential given their PER, PBR, and PDR metrics and risk-reward valuation. From there, we saw that Converge was the most undervalued of the 3, and with a company meeting, we confirmed that Converge ticked all of our boxes and had the most potential to take advantage of this shift. Thus, we invested in them at a price of 11.5, and as of today, they are trading at around 16 pesos, which is a 40% increase. At Luna, we don't explore, we discover. With Apsis, we know where things are, and we have automated the discovery process. We were able to leverage technology to improve our decision-making process, maximize our returns, and minimize our losses. I hope we were able to help you all start your investment journey by giving you an inside look at how we do things at Luna.
That's the end of our series on how to build your wealth using stocks. I hope you guys learned and gained as much confidence as I did. If you guys want a more in-depth tutorial or explanation about stocks or investing in general, or if you guys have any suggestions on the kind of content you guys would like to see on Luna's platform, let us know in the comments below. Again, thank you so much for accompanying me throughout this series, and I hope you all make it to 75 million. See you all next time.